Sweetwater's Rogenomics on the mat, Radio with Pictures, World Cup in Spain, a Piggy Muldoon, Springboks Tour, a Sailing Away. All headlines from the 1980s in New Zealand that will resonate to my audience. YouTube shows me all the demographics, by the way. Another event from the heady 80s that won't be forgotten will send shivers down many a spine. The share crash, 1987. A global event known here as Black Tuesday, Monday, New York time. The economic ramifications from this one day resonate 4 decades later. Tuesday the 20th of October 1987 scared thousands of households out of equities and into housing, when just a day earlier, every man and his dog went in big time into the market, heard about their mates or the bloke at work making a paper fortune, then fear of missing out took over. Greed and hubris trumped fundamentals. Kiwis who didn't know the fundamental concepts of price-earnings ratios got in, boots and all, based literally on a tip from a bloke in the pub, what they'd read in the newspaper from so-called experts who, at one point, couldn't fail to pick a winner. Not that they also were that fussed on company fundamentals either. Trades and commissions had never been better. Middle-class suburban housewives, who had more chance of knowing the entire list of characters from Coronation Street than what a dividend yield was, nevertheless banded together to form share clubs, dreamt about snarling one of the rich alchemists turning paper into gold. Whilst the tiny New Zealand market fell 15% in the wake of Wall Street, a percentage that was actually 5% less than at ground zero, New Zealand's market kept falling, whilst other markets like the US, Australia and the UK plateaued and then recovered. 3 months after Black Tuesday, the NZ market was down 60%. There was no cat to bounce. At the height of the New Zealand share frenzy, there were 309 companies to invest in. The business page in the daily papers was a must-read. It took a full page and a bit just to cover the days before trades. A staggering statistic is that in the 4 years prior to October 87, the market had grown by 490%. Stick corporation behind your name. Corp. Corpa. D. Corp. Well-appointed officers, 3 stories up, mirrored glass of course, a flashy prospectus. Take for example like Omni Corp, a spin-off of the toxic triumvirate, Equiticorp, Chase Corp and Rainbow Corp. They were floated at 50 cents, rocketed up to 270, and were seen to have more upside by brokers. In a convoluted deal, Omni Holdings, a Swiss-registered investment company, took over Omni Corp New Zealand in October 88. Shareholders actually salvaged something from the ashes. The very few who were in the IPO actually got their money back. I'm not actually sure what Omni Holdings saw in terms of value in Omni Corp. In layman's terms, it was left hand giving to the right, and given in the 12 months after the crash, they'd lost 32 million. What I'm indicating here with this example, you would have cheques in envelopes, clogging up letterboxes, backing any array of seat-of-your-pants enterprises these entrepreneurs could dream up. A good dozen of the listed companies on the New Zealand share market in 1987 were companies that just invested in other companies' shares. To quote convicted fraudster Alan Hawkins of Equiticorp, "The boom was like an orgasm. When we asked them for money, they came running at us, panting, yelling, waving their cheques in the air, lusting for a piece of the best company prospect." At one point, on paper, Hawkins was New Zealand's second richest man. Equiticorp shares were at $3.50 on ground zero, 87. By 89, the government had placed Equiticorp, their 150 interrelated companies, into statutory management. Executive Chairman Hawkins would end up facing charges of stealing $88 million from the company and got sentenced to 6 years. It would take till 2010 for the 5,400 shareholders in Equiticorp to see a pittance of their investments, between 1 and 2 cents per dollar. Hawkins was a grand example of a cowboy in pinstripes. The public, brokers, were oblivious. These emperors of commerce had no clothes. It was a feeding frenzy. Just 200 metres from Equiticorp's swanky Christchurch offices, Richard Bolton, from sharebrokers Hamilton, Hindon and Green, had this to say in January 86, under the Christchurch Press newspaper headline, "Selectivity Key in 1986."
The reasons and arguments go like this. Well-driven companies like Briley's, Apex, Equiticorp, R&W Helby have a high profile and investors should follow the man.
And follow the man they did. Lambs to the slaughter. In case you were wondering, there are now only 179 listings on the NZX today. Let that sink in. 309, 1987, 179, 2025. By my rough count, only 40 of those are survivors from 87. Then there was the effect it had on the brokerage community, the ones talking up the companies that had gone tits up, taking their clients' money with them. Reputations weren't the only thing lost in the tale of Black Tuesday. The massive downturn meant 50% of the staff at these brokerages got laid off. Poor diddums. Commissions were cut to the level. The once flashy long lunch trader, whiz kids with no idea, now needed to find a proper job. To make things worse for the share brokers, the punters that had made trades in the days leading up to Black Tuesday, well, they weren't exactly too keen to stump up with a do-re-mi on a share that had shed 50%. They were cancelling cheques left, right and centre. In boom times, in the mid-80s, proportionally, New Zealand led the global equities league table, saw main centre stock exchanges undergo major upgrades to tackle the demand, just in time for the collapse, make their newly employed staff redundant. I'm just going to close this one out here. If I get good feedback on this video, the numbers, I will further delve into the rogues gallery behind the largest collapses in the mid-80s.
Bruce Judge and Judge Corp and Ariadne, Ray Smith, Gold Corp, Missing Gold, Missing Silver as well, Chase Corp,
If you'd like a follow-up on the subject, therefore, please let me know. And part 2 is up to you guys, my fine, outstanding subscribers. Bye for now.